All righty, let's jump right in. Starting with our market meteorologist, all the latest news affecting the economy and the real estate market in the state of Hawaii.
Mhm.
What's going on, Scott?
Yeah, I mean, the first one we have is the insurance. There was a title, an article that came out, Insurance Crisis Worsens in Hawaii's Condoland. And so, just to give a quick background, or as much of a background as possible, effectively what's going on is condominiums fall into a little higher risk insurance component for insurers. There's two components to condominiums insurance. There's the hurricane coverage insurance, which is a separate policy. And then you have your general condo master policy, all of which are paid for in somebody's maintenance fees. They're included in your maintenance fees. But what's gone on is the reinsurers market has lost over $1 billion worldwide from catastrophes that have happened over the last few years. And in doing so, they're affecting condominium insurance around the country, around the globe, and in particular in Hawaii's condo market. And so what's happened is premiums have gone from, say, 25,000 for hurricane insurance to for some to $125,000,
Wow.
which is an extreme increase, which obviously means that gets passed down to the unit owner via either an assessment or by raising the maintenance fees.
Okay.
And in doing so, what's come down, this has affected over 400 buildings in the state of Hawaii from an insurance standpoint. So there's a couple of things to understand with this, that association board members, what they've what they're looking at is, okay, do we have 100% coverage for our building and pay, let's just say, for example, $125,000 premium for this year? And if so, then they're probably looking at a maintenance fee increase or an assessment. And if they don't, the other choice that they've been making is to say, you know what, if a hurricane comes by, and it blows out we have a hurricane, it blows out the windows, destroys the cosmetic interior improvements, but the structure of the building is still there. So some association boards have actually not gone with 100% coverage, they've gone with less than 100%. And in doing so, that has a problem. It affects financing, because one of the stipulations for being able to get traditional Fannie Mae, Freddie Mac conventional financing is to have a certain level of coverage, which is 100%. And in doing so, you now eliminate those loan programs. And for some buildings, you now can't get financing on when purchasing a home or doing refinances on loans. There are portfolio options for some buildings depending on how their insurance is covered, but it's impacting the condo market. And it's a problem not just from because it's affecting so many units and so many buildings, but it's also, condos are an affordable way of getting into home ownership. That's typically the first step for people to get into home ownership, is into a condo. And in doing so, we're now significantly hurting the ability for people to get into home ownership. So this is an issue, and it's a problem right now.
Yeah, I'm just going to add that obviously what we've been dealing with is some higher interest rates over the last several years, as well as prices rising and inventory being low. So this insurance adds another layer of you know
It does, and I think it's a bigger impact than rising interest rates, because as interest rates go up, you as a buyer, you still qualify for a loan. It just may not be the same loan amount; it might be less. But it's different than, hey, that building is non-financeable. You can't buy a unit in there unless you're bringing cash. So it does present a significant issue, and the state has acknowledged it, and recognized it. And there's going so people the consumer needs to be aware that when you're going to buy a condo, this is something that's out there. You need to understand it and educate yourself, or work with a good realtor that understands it, and walk through that process and have a game plan for, is are my maintenance fees going to go up next year by a decent amount? because of this. Now, the reinsurance market is starting to level out, but that doesn't mean the insurance rate premiums are coming down. It just means they're leveling out. And so we hopefully don't see any more increases, but that's not the end of it. There needs to be a solution for that.
Okay. Well, and so give us a solution.
so,
I mean,
so I think there's going to be, going forward, there's going to be a couple of different things that come out. One, I've sat on boards for over a decade, and so I've seen the push and pull between don't raise my maintenance fees and invest the money to fix it the right way. So I think, one, associations are going to have to start looking at how they treat maintenance in a building a different way. So if you want to put band-aids on things, you want to put chewing gum on stuff as the fix, if you keep having claims that you are constantly having to make on your insurance, then you're obviously in a higher risk component, and your premiums are going to be higher, or the insurance company dropped you altogether. So I think one component is the fact that building boards and associations are going to have to start treating the maintenance of the building differently to reduce their risk capacity to the insurance company to help keep premiums lower and to make sure you're insured. Two, Fannie Mae and Freddie Mac, if there's the 100% coverage component that they're going to have to debate, but that impacts values of the property, because if you can't get standard financing or you can't get financing, you're now impacting the value of the building. And so, three, is Fannie Mae and Freddie Mac going to adjust their guidelines on whether or not they require 100% coverage? And then the fourth, which is what I think is going to end up happening, is the state will step in, at least temporarily, probably to initiate the hurricane fund or tap into the hurricane fund that we've always had, to provide a stopgap insurance that is a little more affordable than, say, having to go to Lloyd's of London or something, to help bridge the gap to get us through to a more permanent solution.
well, that makes sense. I mean, and like say, it's an ongoing issue. It's been recognized more recently as something we're going to be dealing with for a while, and yeah.
So there's two important things. People always look at this as, oh, it's very, very bad news. Yeah, it's not great news, but guess what? There's opportunities in that, right? Buy on bad news, sell on good news. If you want a dip, say in buying in the condo market, this is a proponent that provides, you're going to have less competition, which means you're going to have softer prices. Even though prices are up right now, number of sales are down 25% this year on condo sales on Oahu compared to last year. So there is an opportunity. It comes with risk. You have to understand that risk component, right? And you have to be financially secure if you're going to go into that. But the other component is, if you're going into the condo side, make sure you're informed and educated. Work with someone that can help guide you through that process.
Okay, that makes perfect sense. Yeah, and again, it's there's a lot to be determined, so to speak, for that issue. But Scott, you mentioned that you wanted to put some links in the show where people could go and find articles about that particular issue.
Yep, we'll put some down below so you can read more on it.